Felicia, thank you again for inviting me to be part of this. I definitely feel like it's important that we have these type of platforms to communicate and share information because, it's what moves the world. And we definitely want everyone that's here to just to know that there are good professionals in this business that are there that you can rely on to help you through the home buying process. As Felicia said, my name is Keshav Singh. I am a mortgage banker. I'm a vice president of the Federal Savings Bank. I'm licensed to lend in the entire country. So whether you're looking to purchase your home in New York, New Jersey, Connecticut, your vacation home in Florida, or wherever you're looking to buy, I'm your guy. And my specialty really is also working with first timers. I feel like, I spend a lot of time with first timers, just making sure that they understand the process, making sure that they understand what's expected of them from a financial standpoint, from a documentation standpoint, and ultimately, coordinate with everyone else. Most importantly, the realtors as well as the attorney to make sure that we have a successful transaction. So again, I appreciate you having me, Felicia, and I'm looking forward to being a resource to everyone that's here. And let's hope we have a good session today.
Yes, definitely. So of course, I do have a few questions for you to get it started off, because I know everyone might be shy, so maybe they don't want to ask any questions yet, even though they're the ones probably looking to buy some type of property. But definitely I know that, as realtors, we often get a lot of questions, and sometimes those questions are not always even a realtor-based question. Sometimes they are an attorney or even banker question. And I think it is more so there's just so much information out there, and it's like, consumers may not be getting the right information they need at the time that they're looking, or based on what their scenario is. um so I'll
I love
start
this
back
little
with
car for some
Crystal.
reason.
Oh, hold
Maybe
on,
just
I'll
because it's
just
red.
mute. Okay.
It's cute though.
Okay. Okay, great. Yes. So I'll start with Crystal. So I know that typically the attorney's role falls a little bit later down the line of a transaction, or that's just kind of the culture of what happens. But can you talk about the importance of maybe aligning yourself with an attorney earlier on the transaction? Because I know, as for consumers or buyers, they often wait till like they're almost going to go to a contract, and then like, oh, I don't have an attorney. So I'm starting a little bit backwards, because we know financing definitely has to come first in order before you look at properties, but definitely how important it is for consumers to start asking about the legal process and the attorney's involvement within their transaction.
Right. Yeah. So that's a great question. So when you're in the market to look for a home, it's very important to build your team right from the start. You should know who you're going to take your mortgage through. So you have Keshav here. He's going to ensure that you have a pre-approval. Then you have Felicia here, your realtor. You want to have your attorney in place, and you want to have your home inspector in place. Why that's all important just right from the start is because the real estate market moves very quickly. So the day you put your offer in and it's accepted, right away you want to order your inspection. Right away, you're going to need that pre-approval from Kashabi. You're going to need Felicia. She's going to be your party that's taking you out to find homes. And then when Felicia gets your offer accepted, on that, what we call a deal sheet, she's going to have to put the name of your attorney down on that paper. So at that point, it's not the time to shop around, because you don't want to lose out on a home because you're looking for an attorney. That's the last thing you want to look for at the time in which now your offer is accepted, because it's such an exciting time. But everything moves very quickly. So you should have your team in place just right from the start, so you're not scrambling last minute, or you're forced to use an attorney that you didn't really have time to vet. You want to ask the attorney certain questions as to their experience and, how quickly they can turn around a contract. So you want to be able to do that before you even start looking for a home. So it's very important, Felicia. So thank you for asking that question.
Awesome. Thank you so much. I think that was pretty clear too as to why, they should start seeking an attorney early on and start asking for at least those referrals. And I just want to add something. I think it's important to know if the attorney is a real estate attorney, because as a realtor, we always get, my friend has an attorney, and I had an accident before and I used this attorney, and and I always ask, is that person well versed in real estate law? So I understand probably most attorneys do study some form of real estate law, but do they actively practice real estate law? And I think that makes a big difference for the success of their transaction.
Absolutely. Yeah, you want to be sure that they're equipped to handle the transaction, because one thing that's important now in the pandemic, we're handling contract signings by way of DocuSign. So is the attorney even set up to send you a contract by way of DocuSign so you can sign it very quickly? Is the attorney set up to accept wires and to, and knowing all the rules and how we're kind of navigating during COVID. So just to ensure that your transaction is moving smoothly. So those are all good points, Felicia.
Good. Thank you so much.
Absolutely.
So now I'm going to take it on to Keshav. And so we definitely know that the finance portion is very important. But from time to time, again, as a realtor, we may have some buyers that show up to an open house, or, a lead that calls you and say, hey, can I see this property? And then, are you pre-approved? And sometimes the consumers or customers and clients are not yet pre-approved. So can you just explain how important your process is? And then probably we can get a little bit more into detail about what's going on with some of the products right now, and what's being offered like in New York State, and also maybe what you see differing in some other states where you are doing loans as well.
Yeah, for sure. So just to piggyback on what you said, and maybe I'm a little biased because I'm the banker, but
Right.
the pre-approval process to me is the absolute most crucial part of your home buying process. And it's really going to be it really establishes the basis of your entire transaction. Meaning, by the time we're done, so the way I do things is that, we have to be very thorough, right? We collect all of your documentation up front, which means pay stubs, W-2s, bank statements, tax returns if you're self-employed or if you're claiming rental income, retirement assets, wherever the money is coming from, whether you're liquidating stocks or anything of that sort. But we want to make sure that we have a complete financial assessment of your situation, because when you go to that open house and you place an offer, you're probably competing, especially in today's market, with dozens of other offers. So you want to make sure that once your offer gets accepted, you are in the best possible position to complete your transaction, right? So it's my job as your banker to make sure that you understand what you're about to get into, right? Everyone wants to know the three things. Hey, how much can I afford? How much is it going to cost? And ultimately, what are my limitations, basically, For example, a lot of people who were living in Queens, they move out to Long Island. The price range are very different, but even if you find a house within the same price range, we all know property taxes in Nassau County are very high.
Right.
So you may be able to qualify for a $600,000 home in Queens where the taxes are, let's say, $4,000, but you may be, it may be a challenge to qualify for that same $600,000 home in Nassau County where the taxes are four times as high, maybe, $12,000, $15,000.
Right.
So as your banker, we go over all of those things to make sure that you understand what you're getting into. And then a lot of times people don't really know, hey, how much can I afford? Well, it's my job to make sure that we work together, right? It's a team. You have your realtor, you have your attorney, you have your banker. Eventually along the line, you'll have your insurance agent and other parties who are crucial to your process. But you're also a crucial member to this team as well, right? It's not you looking from the outside in. I always tell everyone that this is a team sport, and you are also a crucial member of that team, right? Because your process doesn't end at the pre-approval. It's just like an intermission, right? Now you're pre-approved. We've pulled your credit. We've checked your income. We've calculated your assets. you've already spoken with your family members or whoever is going to be moving in with you. So you know, okay, you know what? Even though Mr. Singh said we can afford we can qualify for a $4,000 payment. I know my bills and what I can afford on a monthly basis. I may not want to go over 3,500 or 3,000, right? That's a real conversation. So qualifying for a mortgage is really different than what you're actually comfortable paying. So my job and my team's job here at the bank is to make sure that you understand the difference and we have these discussions. So when I send you back to Felicia, your realtor, with that pre-approval, it may not necessarily mean, be a pre-approval for the maximum that you could get on paper. It's really going to be, it's really going to reflect the payment that you're comfortable making, right? And that's really important, especially since, the cost of living in New York and this area is so high. We definitely want to make sure that, I don't get a call 6 months from now saying, hey, you can't afford the payment, right? So that's really, really important that you understand. There's a big difference between qualifying for a mortgage or for a purchase price and it being an affordable option for you. But yeah, like I said, we do a lot of work in the beginning of the process because things are going to move pretty quickly. Once you have an accepted offer, you're expected to get an inspection done right away. We're expecting to have, a meeting with your attorney within the next few days, to set up an appointment to sign your contract and to get that ball rolling. We actually start your application process, a formal application, once the sellers sign their contract, because that's when you're officially in escrow, right? They've deposited and I know Crystal is going to kind of expound on that, but that's when we start your application.
Yeah.
And once you have your pre-approval letter, it may take you a while to find a home, right? Maybe a month. Right. Some people are lucky. They go out one weekend, they look at 5 properties and, they're lucky enough to land, maybe 1 or 2. I had someone who just had 3 accepted offers this past weekend, wow. Actually. And
that's awesome.
So this whole week was just deciding, which house do you want, which is unheard of in today's market, right. Because it's so competitive. But they were super strong buyers, and a lot of times, to be honest with you, and this is something that maybe not a lot of people know, when we do a pre-approval letter, my phone number, my name and my number is on that letter. So almost 100% of the time, that listing agent is going to call me. Right. And they're going to say, hey, Mr. Singh, we just, we have an offer from your buyer and we just want to make sure that they're going to be able to get this mortgage. Right. It's that level of certainty. They want to be certain that if they accept your offer, that you're going to get this mortgage. So they want to make sure that we did all of the things that we did when we went through the whole pre-approval process. Did we pull credit? Did we, sometimes we go as far as doing a job verification with your employer. If we need to use, bonus income, commission income, overtime to help you qualify, we go that extra step. And we do all of that in the beginning, even before you even found a home. Again, because we want to make sure that when I pick up that phone call from that listing agent, I sell you, right? I say, look, these people are solid buyers, regardless of how much you're putting down, whether it's conventional or FHA, and we can go into some of those details later on in our talks, right? But, if your banker did their job correctly, your offer should get accepted, no problem, right? And then that becomes the real work, which is to get your application underway. So, like I said, your pre-approval process is definitely, for me, your most crucial part because it's going to set the tone for your entire transaction.
Right. I agree. Because again, I think people get confused about, where do they start first? But definitely, I think if they don't know how much they can afford, it's not safe to go out looking or guessing on what it is you think you can get approved for and different things like that. So I think it's 100% important to really, again, if you don't know of a banker, you align yourself with a realtor that you establish rapport with or you trust, and definitely take those suggestions because it can go the other way. Sometimes you find someone that you want to work with and the communication is not there, or maybe, again, there's a differentiation in information. So you really just want to know the proper questions to ask. And that's kind of more for the consumers, the questions to ask and what it is are you looking for? How much do you, as you said, how much do you want to spend per month? You might be able to afford a house up to $1 million. That doesn't mean that you necessarily want to buy a home. So I think talking to the banker and knowing the difference, even the taxes for our area, is very important. Because people bounce back and forth. They might be looking in Queens and Nassau, right? So those are two different numbers, as you mentioned. So thank you for that feedback, and definitely I have some more questions for you. But I'll take it back to Crystal because I did see someone had a question. And I'll also chime in with that question because I think that part might be a little bit confused with also the realtors part in the transaction and who do they represent. So thank you, Don, for attending. And he said, so he's currently looking as well. But he said for the attorney, attorneys can represent both a buyer and a seller, not necessarily always on the same transaction, but that could be possible. So he said, is the attorney supposed to let the consumer know upfront who they're representing on the deal, buyer and seller, or can they do both? Um, so
Yeah, that's an awesome question, Don. Definitely. So most times, unless you're family members, there are two different attorneys. There's a seller's attorney and there's a buyer's attorney. Why? Because you both have, different interests. So you don't want there to be a conflict. There in the case of maybe family members selling to each other, sure. Can you represent both a mom and a daughter, maybe mom selling to daughter? Sure, as long as a document is signed, but that's unusual. It's not really the case in your transaction. When you put in an offer, you're represented by a real estate agent, and typically the seller is represented maybe by a real estate agent, unless Felicia can talk about this more. But that's the same for the attorney. The attorney, you'll have your own attorney as a buyer. So I would represent you as the buyer. And then the seller's attorney prepares the contract. So the seller has their own attorney. So when I say I represent sellers and buyers, not at the same time, I wouldn't customarily represent a seller and prepare a contract and then have the buyer sign. I would represent one of the two sides. And in this case, of course, Homebuyer Seminar will represent you as the buyer's attorney, and the seller would have their own attorney to prepare the contract and work in the seller's separate interests.
Yes, thank you. So Don, I hope that answers your question or gives you some clarity. And I think Shihan also answered, you have to make sure also the real estate agent discloses that you're representing, the buyer or the seller, not only the attorney. And I'll just chime in just very briefly on how that happens. So you as a consumer or customer, you have the right to choose who you want to work with. So that even goes for the realtor. So if you choose a realtor upfront, that becomes, the realtor for the buyer. Now, there are cases where the realtor, the buyer's agent, may have a listing that you're interested in, and they were already contracted by the seller. So in that case, that does designate like dual agency. Let's say you, the buyer, you're working with the realtor, and your realtor also has a listing from a seller that you're interested in. So that's, they have to disclose they're working for both you, the buyer and the seller. But in many cases, as Crystal said, when you contract someone as the buyer's agent, it doesn't matter who has the listing, they can show you any house that's out there and available, and they become, your exclusive buyer's agent. And obviously there's some more components to that can be discussed further. Again, if you are looking for a buyer's agent, but I personally do suggest that people seek an agent. It's not always wise to go bouncing around like, on your own, just browsing open houses, and maybe you're working with one realtor this week and the next week you're with another realtor. So also on the consumer's end, you really want to just disclose that. I think being honest and transparent, like, hey, I was working with one realtor last month, it really wasn't working out, I let them know, and now I'm looking for another agent, because you don't want to get yourself tied up in a bind with multiple agents as well. This happens, and then no one knows who to put in an offer from, or who's dealing with who in the transaction. So as consumers also, the transparency is important, just like it is for us, the professionals. So you would always know who's working on behalf of you. And definitely, obviously, if there's ever time that you need to switch a professional which we hope you wouldn't have to during a transaction, but the transparency is very important. So I hope that kind of answers. And thank you, Shihan, for also elaborating. I believe he may be also a professional, a realtor as well. So we're glad to have you here. And for Keshav now, I know that we talked briefly about, the getting the pre-approval portion and then where the attorney steps in. But now, when someone comes to get pre-approved, can you discuss a little bit of the difference between FHA and conventional? That seems to be another big question. A lot of people come with their own assumptions or myths about the difference of FHA and conventional and what's better or best for them. But sometimes it really depends on that buyer's individual scenario of what product they can get.
Sure. So the good thing is that, as in any type of industry, you have choices, right? You have a lot of selection when it comes to the mortgage products that are available to you. But fundamentally, there are two main residential lending products that we have available. One is the FHA, which a lot of people have heard about, and the other one is a conventional loan, which is offered either through the government agencies, Fannie Mae and Freddie Mac. Again, we've probably heard some of these names before. FHA loans require 3.5% down payment, and typically the rates are a little bit better compared to conventional rates. That being said, if you are looking to buy a home and you have as little as 5% down payment and you have good credit, we may also explore the option of you going with a conventional loan as well. I know we have limited time here. I don't want to, speak in too much of a detail, but you can get either loan. It really would depend on your particular financial situation. So for example, FHA loans are very forgiving when it comes to having credit issues. We can go as low as, a lot of lenders may advertise that they go as low as 580. Those days are over. I think right now for FHA loan, we can go as low as 620. But ideally, you want to be anywhere, above 640 for FHA. For conventional loans, you have to have at least good to strong credit, which would mean anything above a 720. So we'll definitely take a look at your credit. And, like I said, every program has its own merits and every program has its own drawbacks. One of the things that we discuss when we look at both options is the PMI, right? If you're not putting down 20%, you're going to have what's called mortgage insurance. Well, the PMI for FHA is higher than the mortgage than the PMI for conventional loans. So again, those things are a little bit what differentiates both loan programs. But ultimately, I just want everyone here to know that you do not need 10 or 20% to get into a home. I think the biggest challenge that people face is, and I just had a conversation with a client 2 days ago. Her dilemma was, we don't have enough money to put down. So typically, when I hear a question like that, I think that this person may just kind of decided this year that they're going to start looking. They just might not have their finances in order. But what she was referring to is that she doesn't have a full 20% to put down. And she really said that she was going to wait an entire year until she's able to save another 10%, which is phenomenal to think that it's only going to take her a year to save up another 10%. But you know what? I told her, I said, look, things are going to constantly change, right? We've already seen interest rates go up a little bit over the last month or so. And, because our market is what it is, which is, New York metropolitan area, property values are going to continue to go up. So why put off something for another year when you can get into that home now? She actually ends up, she actually disclosed to me that she has enough money to even, to put 5% down as well as cover her closing costs. So, this is one of those instances where she didn't have a lot of information. And, I'm happy that I was able to kind of, put her on the right path and say, no, you have enough money to complete the deal. If you have credit issues, you can go with an FHA loan. FHA loans are also forgiving when it comes to higher than desired debt to income ratios. So your debt ratios are basically everything that you pay on a monthly basis, your credit card payments, your car loans, Some people have student loans, whatever may show up on your credit report, coupled with your projected mortgage payment and compared against your gross monthly earnings. So for example, let's kind of make the math very simple. If your gross monthly income is $6,000, right? Typically we cannot go over 50% for conventional mortgage. So your mortgage payment coupled with everything else that's on your credit report cannot exceed $3,000. So I'm oversimplifying it, but that's kind of what the math works out to. For FHA does allow us to go a little bit higher than that 50%. We can go as high as 57%, although anything above 55 would require a little bit more of a scrutiny from an underwriter. So that's kind of what the major differences are, right? The down payment, like I said, interest rates are a little bit better for FHA. And number two, FHA is more accommodating if you have a little bit more of a monthly liabilities in terms of your debt. Now, that being said, I know a lot of people ask about seller's concession, and that's one thing that we can, that we definitely look at. Seller's concession is where you're asking the sellers to allow you to finance a portion or all of your closing costs. And, I know we have a couple of other realtors that have joined us, Shihan being one of them, and we'll all tell you that given the state of the market that we're in now, it's highly unlikely you're going to get any sort of, seller's concession, maybe a partial, maybe $5,000, $10,000. But the reason why I brought that part of it up is that FHA actually does allow you to put 3.5% down and finance the entire 6% closing costs. Maybe even if it's, even if it's a little less, you're able to do so. With conventional, you're not. You're capped at 3%. If you put if you put more, 10% or more, then you're able to do a full 6% seller's concession on a conventional mortgage. So again, both terrific programs, both have low down payment requirements, but again, they both have their own characteristics in terms of what they will allow. And as far as their monthly payment, like I said, the FHA PMI is always going to be a little bit higher because that loan is federally insured, and the federal government has a rate that they attach. So it's a standardized rate that's based on the amount of money that you're borrowing. And there's only so much that we can cover here, guys, but obviously at the end of this, I will share my contact information with all of you, and we can definitely have follow-up conversations and discussions to make sure that you're ready when the time is right to move forward with your home buying process.
Yeah. And actually, I just have a quick question for you, Keshav.
Sure.
Can you touch upon? So can you explain the difference if someone possibly owns a home before, maybe they had a gap of, maybe they did use an FHA loan maybe like 5 years ago and they no longer own that home, but they're looking to buy another property. Where would they fall in lines of, some people say, hey, can I use FHA again? Do I go conventional? What's my down payment? So I know that question comes up a lot for those that may have owned the property sometime before.
Yeah, that's a terrific question. It's one of the most common questions we get asked, right? So in the eyes of the government, it has to be 3 years. So if you owned a home, a few years ago, and let's say you sold it, or unfortunately people have life events, maybe divorce or what have you, where where you're no longer a homeowner. Once that 3 years has passed since the transfer of title to the home, then you're technically considered a first-time home buyer again, which is terrific. So yeah, you can absolutely utilize FHA after the 3 years.
Okay, good, awesome. And another thing I want to just touch upon, which I think Crystal probably can answer into this as well. So let's just say they get the banking process out the way, they know what attorney and realtor they want to use, and they start looking at properties. I know something that has been becoming common for our area, like minor violations and title issues. Crystal, can you speak a little bit more in detail about how you also aid the buyers with any hiccups that might come up, after, let's say, God forbid, they get a contract, they get an accepted offer, you get excited, and then we might find out there's some other issues there that you would have to take care of.
Yeah, that's a good question. So the attorney, your attorney, the buyer's attorney orders the title report. The title report will tell us if there are any violations or judgments or anything that need to be resolved. A lot of times things can be resolved, such as, judgments at closing just by payment. When it comes to a violation, sometimes those are a little more complicated, but it doesn't mean that you're not going to close on the property. There's just some conversation that's had regarding a violation. For instance, if there is, say, a sidewalk violation, a sidewalk violation is issued a lot of times in the city if the sidewalk needs repair. If there is a violation that shows up, a sidewalk violation on the title report, what I would first do is reach out to the seller's attorney and ask, what is the seller's intent concerning this violation? Most times the seller knows about the violation, the seller is going to work or may have already been in the process of working with the city to ensure that violation is removed. If it's not removed by the time you're ready to close, there's something we can do, and that's hold money in escrow. The seller's attorney will hold back a portion of your down payment. So your down payment is held in the seller's attorney's escrow account. At closing, typically that full down payment is released to the seller. If there is a, say, violation on the property, then the seller's attorney, instead of releasing that full down payment to the seller, because now we're closed, they're going to hold back a portion of that down payment until such time as the seller continues after closing to resolve this violation. So because there are violations, it doesn't necessarily mean that, you're not going to close. It doesn't mean you're not going to close. There's just different things we have to figure out in terms of getting it to the closing table. Again, holding money in escrow. Maybe you'll close with the violation and maybe seek a credit from the seller. Or, maybe the violation will just be resolved by the time we get to closing. So if you are working with a experienced real estate attorney, that attorney will be able to kind of direct you as to, what's customary and how to get this closed in a reasonable time frame.
Awesome.
Thank you.
Thank you. That's great. And now we do have another question from Dawn. And this is a banking question. So it was, do credit unions, and this for Keshav, do credit unions generally give better rates for mortgage loans than banks? Or is that just a myth? And also within that, I have a piggyback question. Could you just explain the difference between a mortgage bank and your traditional retail banks, like, TD Bank? I don't want to throw a name out there, but like TD Bank.
That's all right.
What's the difference between your retail street banks, if you will, and a mortgage bank where maybe not as so much accessible?
Okay, so that's a great question, Dom. I'm probably going to get in trouble from my peers for saying this, but gone are the days where one lender is going to be substantially different from another lender, right? And I'm speaking, with two very busy professionals in our business, and they'll tell you, right? What this is ultimately going to come down to is the level of professional that you're working with. Okay, but credit unions are, sometimes they're able to tailor fit a product that they only offer to their members, which is terrific, right? I'm not one of those bankers that get sour if they lose a deal to a credit union. I will be honest with you. Hey, you know what? This is a terrific deal. You got to take it, because what's important to me is that you get into that home. I touched a little bit on the FHA programs earlier. Credit unions are not able to offer an FHA program. So immediately it kind of disqualifies them from helping a large segment of our purchasing populace, right? So again, I think if you're, like I said, if your credit union is offering you a terrific product or program, run it by another banker. I mean, that's what we're yes, we are in this business to get your business and to make a living, but we're also in this business to make the entire industry better, okay? And I think Felicia and Crystal will also agree with me on that, right? As professionals, we kind of have to uphold that banner and, maintain a level of integrity in our business. But side by side, if you were to put our rate sheet against any other lender today, we're not going to be any different, right? And, maybe on any given day, yes, one lender could be a little bit better or a little bit worse than another, bank. But what really is important is for you to find someone that's accessible, that's knowledgeable, and that's really going to take the time to explain things to you, right? A lot of times people call us and say, hey, I submitted an application, and Felicia touched, about the difference between a commercial bank and what my bank does, right? And they applied with another bank. This happens to be one of the top 3 largest banks in the country. And because they're so busy, it took them almost 6 weeks to process their application. And in our business, 6 weeks is just not acceptable, right? So it's not that it was a bad bank, it's just because they had such high volume, like we're all dealing with, because rates are still very low. It took them a long time. So the difference between my bank is this, and it's very simple. We have a banking license, which allows us to lend in all 50 states. We're not a bank that handles checking or savings, or we're not going to try to peddle, excuse me for saying that, we're not going to try to sell you financial products, right? So our focus is strictly mortgage lending. So when you deal with someone like me and you deal with my bank, it's all we do. And for your process, it's probably going to be, the biggest asset to you, that you're dealing with a bank that has all of the benefits of a national lender, but not the drawbacks, right? So when you pick up the phone, you're speaking with a banker that has 15 years of experience, and you're not dealing with a customer service representative who has to always tell you, well, let me check with this person or that person and get back to you. Because after a while, that gets frustrating as well. I have friends who unfortunately have made the mistake of applying with their banks, maybe for a refinance or whatever. And guess what? They end up sending me their loan estimates, or they end up, doing a conference call with me, and I'm speaking to events that have happened recently. Why? Because their bank, the representative at their bank was not available after hours, let's say, right? And that's very important. Once that branch closes, you no longer have access to that mortgage professional in that bank. So it's different when you're dealing with a lender that gives you that type of access. And for you, we're no longer, our business is not a 9-to-5 business at all. We work after hours, we work on the weekends, we work over the holidays. So it's definitely important to align yourself with the company that's going to give you access when it's convenient for you. But yeah, I mean, your credit union is not going to be able to blow anyone out the water. Just because, like I said, gone are the days where one lender is substantially different from another lender. Sometimes it comes down to the professional that you're working with.
Great. Thank you so much. And actually, you have 2 more questions, which definitely I'll ask. So one was, how long is the pre-approval valid for? So once they get pre-approved, how long do they have before they may need to renew that?
So just like everything else, your documents do have a lifespan, right? Documents do expire. Everything that's involved within a real estate transaction has expiration dates. Even your contract has an expiration date or a contingency date, a time frame that you're required to obtain not only a mortgage approval, but an expected time of closing. The government guidelines basically attributes a timeline to every single document that we collect. So for example, your pay stubs, your bank statements, we try to get them, I think the current time frame is 45 days. For us, when we pull credit, that credit report is good for 120 days. And your pre-approval internally in our system is good for 90 days. Now, if you don't find a house within that time frame, we don't restart the process all over again, right? We just have to collect some updated documents. Hey, you know what? Your pre-approval expired last week. Send me a couple of updated pay stubs, send me your new bank statement. And just out of courtesy, I don't like to re-pull credit at the same time. As long as we're honest with each other and you say, you know what, I haven't gone and leased a new BMW or do anything, that may jeopardize my chances of getting a mortgage, then we'll kind of work on the honor system and extend your pre-approval without re-pulling your credit at that point. Obviously, it's done so with the with the understanding that, yeah, at some point, once you do find a home, we will have to repull your credit. But the pre-approval that we issue is usually good for 90 days.
Good, thank you so much. So 90 days, everyone, usually are good for about that amount of time, obviously. And I just want to make this clear, you don't have to, now obviously as a realtor, we want you to find a home as soon as possible, but that doesn't mean you have to rush and find a home within 90 days to beat that date. So again, of course, it can be renewed if you happen to not find or secure a property within the first time period of your pre-approval. And I actually just one more question, and I know Ebony had a next question. CJ had a really good question. How can he determine if some of the mortgage brokers or bankers are legit? So I know that's a really good question, because even as a realtor, sometimes we'll get a consumer that has a pre-approval already. And again, we just still may need some verification, or we can't get in touch with that person. So for realtors, this is also important, to help that consumer try to verify or see if their person is legit that they may want to use. So how would you say as a banker you would advise a client or customer on this?
Yeah, that's a really good question, because obviously you want to make sure that you're working with someone reputable, right? I mean, look, if you Google 10 different lenders, you're going to find a ton of positive reviews. And unfortunately, you might find some not so favorable reviews, right? I myself, we're not all immune to having transactions that may not work out in people's favor. And so sometimes it's tough. I get calls from realtors all the time. Hey, I'm working with someone. I got a pre-approval. Did you ever hear about these people? It may be an obscure company. And so the only thing I will say is that, yes, you do have to kind of do your research, right? The good thing is we do live in the age of technology, where a lot of us are visible, whether we have some type of online presence. I know Crystal is big on social media. She's like the queen of Instagram, right? And, for me, I try to post a lot of my closings on Facebook, on Instagram. I'm not as active as I need to be on some of the other platforms out there, but we're going to get there soon. But yeah, I mean, look, if you connect with the lender, take some time to look into them, right? Check them out on social media if you have to. See if they're posting any photos of closings, because that's a good indication of how they're working. If you're not working with someone who's reputable, or a company that's reputable, it's always good to ask another professional in the field as well, right? Don't be afraid to ask questions.
Yes, thank you so much, Keshav. And you do actually have two more questions, so I'll ask it to your two more questions, and then I have a question for Crystal. So one was, how long does it take to get pre-approved, and does the pre-approval count as a hard credit inquiry?
So for us, we try to turn around pre-approvals very quickly. If you send us your documents today, unless I am swamped with the closing that needs my attention, I'll try to get it to you within 24 to 48 hours. That's kind of how, we like to do things here, just because, a lot of times we get calls from people, hey, on a Monday or Tuesday, I'm looking to go out this weekend to buy a home. So if you, and I tell everyone, if you can get me your documents, today or tomorrow, we won't waste any time, right? Well, we do have to pull your credit. And I think this is really important for people to understand. And it's the one conversation that I have almost on a daily basis when I speak to people. An inquiry does not have a high impact on your credit scores. I will repeat that. In fact, if you look at any of the monitoring sites, I won't name any of them because some of them do also own mortgage companies. But if you go to any of the monitoring sites, some of them, they will tell you what type of impact certain things have on your credit rating, right? So obviously, late payments, overusage of your credit lines, opening new accounts, closing new accounts. At the very bottom of that list on all of these services is a credit inquiry. It has the lowest impact on your credit scores, okay? I had someone the other day, he told me that he got upset at another lender last summer because when the lender pulled his credit, it dropped his scores almost 20 points. So I asked them, I said, so how do you know it dropped your scores 20 points? Well, I have this app on my phone that I check my credit, and they said it was at this number, but when the lender pulled the credit, it was a little bit lower. So, I went through this whole thing of explaining it to him. I said, you know what, you were maybe a little unnecessarily too harsh with him, because it's not his fault, right? These credit monitoring sites use a different scoring model than the actual credit bureaus use sometimes. And what ends up happening, you may get a credit score from a monitoring website that's a little bit higher. And of course, who doesn't want a higher credit score, right? But it's always good to have that monitoring in place, because you want to make sure that whatever's reporting on your credit report is accurate. Okay, so I check my credit profile almost on a daily basis, because as a bank we have to be vigilant about what's going on with our personal accounts, right? But having your credit pulled does not impact your credit scores. In fact, and again, I shouldn't be saying this, you can shop with multiple lenders within a short period of time without it counting against you severely. So I think the government does understand that. And the credit bureaus do treat it as you shopping around. So they're not going to penalize you by impacting your scores significantly. So, don't worry about pulling your scores, pulling your credit. It's being done for a purpose, right? You paid your bills on time. You you saved up your money for the purpose of buying a home. So if your lender wants to pull your credit, go for it. The only thing I won't advocate is, obviously, yes, you can shop around with a handful of lenders, but don't go to 10 different banks and pull your credit. That's when you're going to start seeing some adverse effects of pulling your credit multiple times. But certainly running your credit once or twice within let's say a 30-day span is not going to have any sort of impact on your credit rating.
Great. Thank you so much, Keshav. And they have actually really great questions, probably some of the things I would have asked just so they know. So I'm glad that you guys are active and you came with your questions. And I actually kind of had a question for Crystal now pertaining like getting closer to closing, what happens there. And it's funny because Don then asked a question, which this could possibly be a banking or attorney question. So he did ask, does a pre-approval include like attorney's fees, closing costs, and other of those out-of-pocket costs? So safe to say, Keshav, no, it doesn't, it doesn't include any of that. So I don't know who best would want to answer, but when, do they get further information after they secure a property? What are their attorney's fees? Or Crystal, when do you begin to discuss attorney's fees? I want to assume upfront as well. And then any other costs that may come up that probably is due at closing, or the appraisal fee. I know title, title search. So Crystal, you can go first.
Yeah, of course. So when I first speak to the client, I disclose, my flat rate fee. So when you are, building your team, that's one of the questions you want to ask your real estate attorney is, are they charging you hourly, or, is it a flat fee? Also, in terms of when does the attorney get paid? Is it when you sign the contract, or do they get paid at closing? So attorneys operate, different. Some collect half cost upfront and then the other half when they get to closing. So you definitely want to ask those questions in terms of, what you need to bring to closing and all of your costs. Keshav is the best one to answer, those questions, because there is a closing disclosure that does go out prior to closing. So you'll have an idea of the check that you'll need to bring the closing. When you come to closing, you'll bring a certified check, 2 forms of ID. You need also a checkbook. So guys who don't have a checkbook, order one now so you have one in time for closing. But those fees, you're going through, all your costs and your fees with Keshav. He's really, the party that's experienced and going through all your closing costs with you. On the attorneys, and the attorney can, of course, disclose and must disclose their legal fee. And also at your closing, you'll have a title closer, and the title closer gets a gratuity. So that's just like a tip. If you're at a restaurant, you hand over a tip. And, you know, your attorney can kind of direct you as to what's customary based on the purchase price or based on the transaction.
Nice.
And Keshav, I'm going to bring it back to you.
Yeah, so the pre-approval letter does not contain fees. In fact, a good pre-approval letter does not even contain an interest rate. And the reason why it does not contain an interest rate is because rates do change, right? So if you qualify for a 3.25 today, and it takes you a month and a half to find a home, rates may go up or down within that time frame. Okay, so in terms of what we do, when we pull your credit, we base the numbers on the pre-approval, on wherever the prevailing rate is that day. Okay, it's the only fair way for us to assess what your projected monthly payment is going to look like. In terms of your closing costs, it's one of the discussions that we do have when we speak during the pre-approval process, right? So as a lender, our job is to disclose to you the fees that you should expect to pay throughout the process. And earlier, Crystal mentioned that, you know, she orders title, right? So the title company at some point in the process does send us a title bill. And they also do what's called a tax continuation, which will basically let us know if there are any taxes that are due to be collected at the time of closing. So for example, if you're closing in March, and you know, and let's say you're purchasing a home in Queens and where taxes are collected quarterly. If you close in March, taxes are due in April. Chances are, you know, along with the rest of the closing costs that we're going to discuss, you'll also have to bring March, April, and May's taxes to closing as well. Our job is to disclose those numbers to you in the beginning, just to make sure. And again, I can't speak for any other lender because I do see some paperwork where some lenders choose to leave that portion blank because they feel like it's not their responsibility. But you know, a few months of taxes translates to a couple of $1,000s depending on where you're looking, right? So it's definitely important that you know what you should expect, or you should at least have an idea of what you should expect to bring to the closing table. But yeah, the pre-approval letter does not contain any sort of closing costs. We discuss that when we go through the pre-approval process, you know, and I always send everyone just a projection of what they should expect to have, right? There's some things that are not going to change whatsoever. Things such as mortgage tax. Unfortunately, we live in a state that has mortgage tax. So as a buyer, you are required to pay tax on your purchase. I'm sorry, on the money that you're borrowing. The sellers pay what's called a transfer tax. And believe it or not, guys, as a lender, we also have to pay a lender tax. So New York State is getting it from everybody on the transaction. But you know, besides the mortgage tax, which is probably the most expensive portion of your closing costs, there's also the title insurance, and I know Crystal can probably elaborate what that title insurance policy means in terms of protecting you. But you have to purchase that title insurance policy as well as pay for all of the title searches that the title company is going to do to ensure that you are purchasing a home with a title that's free and clear of any sort of encumbrances, you know, to you being able to take possession of that property.
Nice. And Crystal, do you want to touch anything in regards to the title cost or title process? And actually, what does that mean? So in real estate terms, like when we say title, we know what we're talking about. But
Yeah.
for consumer, it's like, you know, what does that mean?
Yeah, so the title, so there's two terms. There's the title report, and then there's the title insurance policy. So the title report is just a preliminary report that your buyer's attorney will receive that shows any judgments, liens, what it really paints a picture of what's going on in that property. So of course, you've signed a contract that lists a seller, and you're listed, of course, as the buyer. When we order a title report, the title report will show us who the rightful owner of that property actually is. So does the seller match the name that's on that contract? Are there any mortgages on the property? Because of course, when you're purchasing a property, you're not purchasing a property with your seller's mortgage on it. You want to make sure that that mortgage will be paid off at closing by the seller. So that's actually the title report, and that's what it does. That's its function. It's to ensure that, you know, again, it paints a picture of the property as a whole, and it ensures that the attorneys can discuss what needs to be removed off the property to provide a property that, like Keshav said, is free and clear of any judgments, liens, mortgages, etc. Now, the title insurance policy, that's insurance. So that's if someone came and knocked on your door after you closed and said, listen, I'm actually the owner of this property. You know, this property was left to me in, 20 years ago, and I'm coming to take my property back. No, you have a title insurance policy that shows that you purchased the home from its rightful owner. If you went to then sell the property, let's say, your buyers are going to order a title report just as you did. Now, if your buyer's title report shows that there's a mortgage from, again, 20 years back, you're going to say, no, when I purchased it free and clear. But how can you prove that? You prove that by producing your title insurance policy. And so that's the difference between the title report, which shows a picture of what's going on the property, and the attorneys can then negotiate and figure out how we can now sell the property free and clear. But that insurance policy is for you. It's a protection so that you have no issues in the future as you're, living in this property, or even once you go to sell the property.
Good. Thank you so much. That was a lot of information, so I hope they understood it. But again, we're recording in case they need to play back. So that was really good, because again, I think people overlook, even sometimes as a professional, we overlook the title portion and just say, hey, that's the attorney's job. But it's really important to really know what goes on during that process, because again, it's kind of like in the shadows, we don't pay attention to that part, but it's very crucial to getting you to closing. And let me see if there's any more questions. So I think you guys did really good with the questions as well. Had very clear questions and things that I probably would have asked as well. So thank you for participating and giving feedback. And we are at like 6:36, which, maybe if we could do like 5 more minutes if there's any more questions, or great. Oh, thank you. So for Keshav, I do have a question. For someone that may be buying a home, like a first-time investor or first-time second home owner, is there anything slightly different they should know than a first-time home buyer?
You mean if they already own a property and they're looking to purchase additional real estate?
Yeah, so I'll give a great example. I got a question this week from a client that purchased a home, and they said, hey, we have some money saved. We're looking for an investment property now. Do we have to do 20%? So questions like that, what percentage now do they have to put down that so they know they're going conventional, but are there any 15%, 10% loans for first-time investors looking to hold and rent and things like that? So what's typically, does it look like for someone purchasing a second home?
So I'm actually working with someone now. I did her purchase about 7 years ago, and we just refinanced her home I think we closed about a week ago. And immediately after her loan funded, she started sending me investment properties, because now she wants to expand her real estate portfolio, which is terrific, right? But simply put, if you're looking to purchase an investment home, the government requires 25%. So if you're looking, let's say you want to purchase a home with the intent of renting it out, right, to generate income, it's 25% down payment.
Okay.
Now, like I mentioned earlier too, because we're licensed in all 50 states, I do a tremendous amount of business in Florida, and a lot of people purchase vacation homes there. And if you're purchasing a second home, it has to be in a known vacation destination, right? Sometimes people say, well, I want to buy a second home, you know, somewhere in close proximity, but it has to be kind of a given that it's where people vacation, right? That will require a 10% down payment. So depending on where you're looking to buy and the dynamic of that purchase, that's going to dictate how much you need to put down as a down payment.
Okay, good. So that's a good question because I have been getting a lot of those questions for people that already own a property, but they're now looking to purchase an investment property and they want to know how much down payment should they put down. So I think that's very important because again, someone here that same kind of question, maybe they purchased with someone years ago, they're looking to purchase now or co-sign with another family member to get a property. So I know there's a lot of different unique scenarios where someone may fall into as a buyer. And also there was another question, which I'm not sure if this would be a bank and attorney question. So from Shihan, he said some banks could close without a C of O. And with a C of O, that's just certificate of occupancy that tells you what status the property is, a 1 family, 2 family, 3 family. So he says, could you explain a little bit more and, if the bank can close without the C of O?
So I'm very proud when I say this. I'm actually one of the few lenders that I know that don't really focus on a CFO. We can actually close without a CFO in New York, which is good. It's understood that, sometimes buildings are built, before a certain time that a CFO may not exist, right? We have come across situations where there were, now I'm not talking about properties where there was like, let's say an illegal conversion, right? It may be something as simple as, the homeowner, the previous homeowner maybe put up like a carport in the back of the property, right? But it's attached to the house, right? As an anchor, right? They don't have a C of O for it or a permit or whatever the case may be. We don't care about those things. Some people, let's say there's a garage that's attached to the house. Sometimes they repurpose that space into a living space, right? Depending on the lender may require for that space to be converted back to its original intended purpose. So again, a lot of it comes down to the lender that you're working with and what they will accept, because they have to, because they're the ones who basically set their risk tolerance for a particular property, right? So they'll tell you, hey, look, we like this about this house, or we don't like this about the house, right? If there's something like an illegal extension, sometimes I tell people it's going to be on a case-by-case basis, really. But if it's something where there is a missing C of O or something of the sort, or, I think sometimes it really comes down to the extent of the infraction, let's say, right? If work was done on the home and, and this goes back to something Crystal touched on earlier, where there may be like an open permit on the property because let's say the town wasn't able to come back to re-inspect the home or to sign off on the work that was done on the property. Yeah, we're not going to hold your closing, hold up your closing because of something like that. So again, it's really going to be on a case-by-case basis.
Awesome. Thank you. Crystal, do you have any input on that? The CFO?
I do. And also, I have a question. A few people asked the question in a private message about the checks. So I'll touch on that next.
Okay, good.
But, with regard to the CO, so, you can purchase a home in any condition. So if there is a home that doesn't have a CO, you can certainly purchase it if you're a lender, your Federal Savings Bank and Keshav, like he said, they will lend without a CO. So you can certainly, purchase the home without a CO without a problem. It's personal preference. Some clients, they want COs for every structure, everything, but it's a business decision because, for every CO, what we hear is there's a chance that your taxes could go up. So, these are things to consider when you are seeking, COs. But, Yeah, you can purchase it with or without a CO. But if you decide to purchase a home without a CO, you want to make sure that you are working with a lender that will allow that closing to move forward without the CO. Otherwise, that's going to cause, a really large, lengthy delay while the seller is working to get that CO. So definitely want to do that. Now, with regard to the checks, a couple of people asked me a question about why do they need to provide a personal checkbook at closing? So at closing, you're going to bring the balance of your closing costs. So when you sign the contract, you're typically putting down just a portion of your down payment. So if you're putting, say, a total of 3.5% down, maybe you're putting that down when you sign the contract, but then you're bringing the remaining closing costs maybe to closing. And that's going to be by way of a certified check. Why I said bring a personal checkbook is because the attorneys do what's called adjustments. So for instance, if the seller has paid taxes, say good through the end of March, then your attorney as well as the seller's attorney will do an adjustment, meaning that if you were to close today, you would owe the seller from today to March 31st a prorated per diem of the mortgage of the taxes that were paid. So again, if taxes were paid good through March 31st, you would owe from the 11th to the 31st. Now, how do you write that check? You can write that, you have to write it in a check. You can't provide cash to the seller. So if there's anything that's off in terms of adjustment, say it's like a $5 difference, a $2 difference, that has to be in a check, and you can then write a personal check for that. So you're bringing a certified check for the bulk of your money, but you also want to have a personal checkbook just in case any minor items come up, such, again, in that scenario where maybe it's a $5 difference, instead of running to the bank to get a certified check for $5, you have your personal checkbook, and that's what you'll use to write that check. So it's very important to have that personal checkbook.
Awesome. Thank you so much. And that's actually a question I wouldn't have thought of, but definitely I'm glad that they brought that up. Because I know we are in a digital age and people probably don't have checks, so they're probably like, why is she telling me to order checks in advance, if I'm thinking about buying a house. So that was really good, and thanks for whoever asked that question. And I actually just have one more question here, which you guys can touch upon. I'll probably start answering it as well, because it's maybe more realtor based. So someone asked, or Amy did ask, thank you, purchasing homes that are foreclosure, in the process of foreclosure, is that a good investment, or should a first time buyer shy away from that? So definitely the process doesn't change if the home is in foreclosure or potentially a pre-foreclosure, which we call a short sale. Foreclosure just means the bank owns the home, right? However, due to property conditions and other factors, there may be some foreclosure homes that are not actually available to mortgage buyers. Potentially they can have tenants in the home. The condition could need a full rehab. So again, while FHA can be lenient with some repairs, like, minor repairs, or just minor fixer up, it cannot be like a full gut property, or, certain things have to be working in the property in order for the bank to finance it. So from a realtor standpoint, especially in our area, you do have some inventory of foreclosure homes that are actually renovated already. The bank may have renovated them, or in some cases, you may see a short sale that was really great condition. Unfortunately, the homeowner just fell behind on the mortgage, and that's how it falls in that status. But for those properties that you guys may see very cheap on Zillow, or they look, the number just looks very odd compared to what's going on in the market, you could kind of, your light bulb goes off in your head. And for a consumer, you can kind of start to guess that that property is very undervalued because there's a lot of things going on there. And traditionally, a mortgage buyer may not be able to buy into that property. So I know that those properties are out there on like Zillow and Trulia or Realtor.com or any of the MLSs, because they do exist, in terms of, you might see a two-family house that says, $1.99, you know, $1.99 for sale, you know, jokingly, but that means that that property typically is not available to the traditional mortgage buyer because there's a lot of other things going on. So personally, I wouldn't say stay away from it, but you do have to take that guidance from your real estate agent that you're working with and trust them when they say, okay, this property does have tenant issues, or there's multiple violations on a property, or just other things going on that may not make it a good buy for your buying scenario as a first time buyer. So again, it does depend on your buying scenario as well, and where you are as a first time buyer, and also how long you're willing to wait. If it's a short sale does not mean short in time period. It just means that there's a deficit of money there, but those transactions can take a year. It can take more than that. So you typically can be sitting in contracts for a year or so waiting for the bank who holds the original mortgage, to really sort that out on the seller's end. So that has nothing to do with the buyer. And unfortunately, as a buyer, you can just be in a waiting standstill on some of those type of properties. And again, for Keshav and Crystal, if there's anything you want to touch on that with foreclosure or short sale, you could go ahead.
Yeah, for sure. So a lot of times, some of these properties may be in some state of distress, meaning that they need some work, right? So the only reason why I wanted to kind of share this information is that earlier I mentioned FHA and conventional loans, which are the two most, common lending programs. And, just so you guys know, both of those agencies, both FHA and Fannie Mae, they have renovation loan programs. So you can actually purchase the home with the 3.5% down and finance the cost of the repairs on that property and close in one single closing. So again, sometimes a lot of people, they feel like they need to have actual liquid cash or some type of extra capital on hand to fix up the property, and that's just not the case. So again, we cannot get around violations. So that's a different story. But if the property just needs some work because it's been abandoned, it's been in some sort of distress, you can actually still complete the purchase with whatever you intended to use as your original down payment and closing costs. The process itself is very extensive, but it could be done. And I'm actually what's a home renovation loan specialist here at my bank. So I'm actually certified to do both FHA 203K loans and Fannie Mae home style loans. So if that's something that comes across comes across your home search with if you fall in love with a property that needs work, just keep that in the back of your mind that you can actually get into that home with the same 3.5% down that you initially had for, let's say, a house that didn't need any type of work.
Awesome. And Crystal, do you have anything from the attorney standpoint about foreclosure or short sale purchases?
Yeah, definitely. So just from my end, just differentiating, foreclosure, short sale. So we understand that sometimes we use foreclosure in two different ways. So a seller could be what we say in foreclosure. That means the seller still owns the house. If my home, knock on wood, is in foreclosure, that means I owe back mortgage payments. And now the bank has started the proceeding to ultimately take my property back in a foreclosure sale. So that's the property that you're purchasing could be in foreclosure. And there's another term, it's called REO. So that's a real estate owned property. That's a bank owned property. So that means now in my scenario, I've already lost my home in a foreclosure auction. The bank has now taken my property back, and now the bank is selling the home to you. So now that home is considered an REO. With a REO or even a seller that's in foreclosure, there's, time is of the essence, because in the case of a seller that's in foreclosure, depending on where they are in the foreclosure process, they could be at risk of losing the property within the next couple of, maybe weeks, months, whatever it is. So that's something to just pay attention to when you are purchasing a home that's in foreclosure. When you're purchasing, but then also when you're purchasing a home that has gone through the foreclosure process and it's now owned by the bank has lost money. So the bank is like, okay, we need you to close as soon as possible because they're paying all the bills on the home. So they're very much ready to rid themselves of this property. So when you're purchasing an REO, just keep in mind the time frame. So it's usually they'll want to close in like 30 days, maybe 45 days max, with obviously extensions, but with those extensions come some penalties. So you want to make sure when you are purchasing a home either in foreclosure or that has already gone through the foreclosure proceeding, a REO, you want to speak to a lender like Keshav just to ensure that he can get it done within the 30 days, the 45-day time frame, which we know in this case, Keshav can. So, and I'm speaking for you, Keshav, but I've seen his work, so I know he can get it done. And so that's very important because in those cases, you don't want to just use any lender. You want to use a lender that can ensure that understands what foreclosure is and understand the timeframes. And also, like Felicia, a real estate agent that's going to be able to negotiate timeframes when they're putting in the offer, and make sure you're protected that way. So I hope that helped.
Yes, that was good.
Perfect.
Let me just make sure there's no more. Okay, so right now we have no more questions. And for Shihan, I hope that Keshav's explanation explained a little bit of what the 203K loan is.
I would require another 2 hours. So
yeah, I know, right? So you got to do a whole session about that, and maybe that is a option. And definitely, Shihan,
yeah.
I would love to connect with you more. Maybe have you also, on a call with some of these questions, and we can do another one, on a very specific topic. Because I think we could go all day with just tapping into other minor areas of the legal process and also the banking process. But I think for what we needed it to be for today, for many people that disclose, they're now starting, they're looking to get those basic questions answered. I think you guys did awesome with getting the general knowledge out there, and then hopefully, some of the people on the call will reach out for further advice or further consultation for the services that they need. So definitely, I appreciate their questions, and you guys, feedback was totally 100% on point for, I think, what they needed to know today.
Thank you for having me.
Yes, thank you. And just for Keshav and Crystal, do you have any last words that you want to say to kind of wrap up your discussion?
Yeah, definitely. I just want to wish everyone good luck in the process. You have your team here. You have Keshav, who's a wealth of knowledge. If you need a mortgage and you don't know where to start, you're going to start right with Keshav and Felicia. They both will direct you as to, what you need. Even if you feel, I saw, someone send a message that maybe their credit wasn't to par. And so you still want to, that's not for you to decide right now. Let Keshav look at all your documentation, and then he can kind of help, maneuver and tell you exactly what you need to do. And then Felicia, of course, will help you, in terms of finding the house of your dreams. So stay encouraged, and the best time to start is now. Don't wait and don't come up with your own parameters of what you need in terms of your credit. Let the professionals help you.
Yes.
Yeah, for sure. Yeah, so like Crystal said, I definitely wish everyone here the best of luck. Purchasing a home is a scary thing to think about because it really is the single most significant thing you're ever going to purchase in your entire lifetime. Okay, so I can understand a lot of people are just nervous. And I always tell everyone, don't be afraid to ask the questions. You know, even though you may feel that it may be a simple question or a silly question, you know, or whatever the case may be, you always have to ask because you have to trust the professionals that you have working around you. My goal is to make sure that you get into that home. So I don't have any other motivations besides that, which means I'm going to do my best to make sure that whatever information I impart to you is going to be accurate, right? And I think that a lot of times, because technology could be good and bad as well, because we have such instant access to information, it's very quick for us to run to the computer and Google something really quick. I always tell people, don't trust that 100% of the time, because a lot of the information that's online, it's, a lot of times it's very dated. You can pull up a guideline from something, that another mortgage company posted maybe from years ago, but it's still on there, right? That they never updated or took down. I also, and this is something that sometimes people have a chuckle out of, I tell them, don't listen to anyone besides the professionals that you're working with. So what does that mean? Mom and dad, they are well-intentioned, but they purchased their home 30 years ago. Guess what? Guidelines are different now, right? The tax laws change, mortgage laws change, everything is different. So even though your neighbor, your friends, your family members, they are all well-intentioned when they want to offer their advice, but your situation may be different than theirs. So you may require different guidance. You may have credit challenges or anything of the sort. You may require assistance with the financial aspect of it. No one's ever going to disclose to you the full totality of what they had to go through when they purchase a home, right? So make sure you trust the professionals that you work with. I have no other motivation but to impart correct information to you. And I look forward to hopefully having an opportunity to work with you guys and bringing you to that closing table.
Thank you.
And don't procrastinate either. Okay, that's another. I'm a serial procrastinator. Pick up that phone, give us a call, and let's schedule a one-on-one session. I know Crystal feels the same way as well, and we can kind of get a little bit more into detail about your personal and your specific situation.
Mm-hmm. Thank you so much, Keshav. And Crystal, you have any last words? Or I know you did.
Yeah, no, good luck, guys. That's it. You got this. Keshav said it all. Don't procrastinate. Don't wait. There's never going to be that perfect time. Just like, anything else in life, you just got to go for it. And again, if you have any questions, just reach out to any one of us and, we can direct you step by step of what you need to do to acquire a new home. So good luck. Thank you so
Yes.
much, Felicia, for having us.
Yes,
Thank you, Felicia.
Thank you, Crystal, and thank you, Keshav, and thank you to everyone that attended. I'm gonna leave the room open a little bit just so you can collect the information that I did type in the chat for Crystal, Keshav, and myself. And of course, you can reach out to anyone if you have any questions. Even if you're potentially thinking about purchasing in another state, never be afraid to reach out. We do also have referrals. Obviously, if I'm a realtor, if it's something I can't handle, Crystal does also have a great referral base of other attorneys if it's something out of her scope. And of course, Keshav does as well, but he also handles all states. So again, if maybe you have thoughts of purchasing here or going elsewhere, you can still reach out to those questions. Of course, our goal, as Keshav said, is to provide you accurate information or correct information, and then you could get a little bit more personal when you speak to a professional one-on-one. But that's the main reason of why I wanted to host this seminar, and I hope to do more in the future. Make it continuous, because I do realize people have a lot of questions and there's so much information out there, but the correct information is really crucial right now. So thank you all for attending. I'm going to leave the room open for like another minute or two, but you guys can leave out if before I end the room. But I'll be here for like 2 more minutes. Thank you.